Welcome back, Sam. Now we are here to talk about the A to Z planning vehicles. And we have some titles here that I hope you can walk us through.
Yeah.
What is a bequest?
Yeah, so we've talked about this in the past, but a bequest is just a very simple blanket term for when someone makes a gift of a certain amount of money or property in a will or a trust, that gift occurs if someone passes away.
And then we have other little designations here, and it says, can you kind of help us out with beneficiary designations for like life insurance and retirement funds?
Yeah, absolutely. So, in the past we've talked about probate and potentially wills don't avoid probate, trusts do. But another way to avoid an asset being subject to probate is through a beneficiary designation. And that is just simply a record with a financial institution that if the owner of the account passes away, that is to be transferred to a person, an organization, whoever it might, a trust, whatever it might be. Beneficiary designations avoid probate. So it's important to use beneficiary designations, even if we're not over the probate limit. It can still be a challenging process sometimes, even below that probate threshold, even if it's a small amount of money. If there's not a designated successor to the account, it's a process. It may not be a full court process, but a process nonetheless. So that is an important way, like I mentioned, just to have on record a small mini succession plan that's specific to that account or asset. If I pass away, transfer to this entity.
We're seeing, earlier we discussed some items may be complex to some other folks. Can you break down what a charitable remainder trust is and the different types?
We've talked about there's all sorts of different types of trusts out there, and the most common being a standard revocable living trust. And that's part of the estate plan for most people. So that's your basic trust that kind of covers everything. Sometimes if we want to, and that is, like I said, it's a revocable trust. It can be changed by the person who sets it up at any time, totally flexible, versus, and a standard revocable trust becomes irrevocable at some point, versus there's this whole other world of trusts that we create that are irrevocable from the get-go. An irrevocable trust is treated more like a separate business entity. A revocable trust, it uses your social security number, it's disregarded for most purposes. But when a trust becomes irrevocable, whether from the start or at a certain point, like someone's death, that trust is treated as its own separate entity. So a lot of times when you get into more advanced trusts, like a charitable remainder trust, charitable lead trust, things like that, essentially what you're doing is taking oftentimes an asset that has a lot of tax exposure to it, whether that be capital gains or, that's a pretty common scenario. I have this, I'm going to receive this big, whether it's proceeds from the sale of a business or an asset, I'm going to receive all this money and there's going to be a lot of tax exposure. What can I do? So a charitable remainder, that category of trusts is where we take the proceeds or we take that asset and we put it in this irrevocable trust. So we say, okay, we're setting this aside. We're going to have a trustee who manages it. The trust principle is ultimately for the benefit of this charitable organization. But for a period of time, I want to continue to receive the income off of that trust principle. So we're dividing up kind of what happens to this lump sum of funds in the future, but also hold it in trust and keep it managed in such a way that I still receive some benefit from it. And then ultimately it goes to the principal goes to that charitable organization.
Can you help us out and define what charitable gift annuities are?
Yeah, so a similar concept, all an arrangement where annuity is say, okay, I'm going to transfer this lump sum of money to a charitable organization, but I need to receive something from that. So a charitable annuity is essentially a contractual arrangement or relationship between a donor and an organization where I'm going to move this lump sum of money to you now, but I need you to pay me X amount of proceeds from the income of this principal over a period of time, generally a person's life. And then once that person passes away, the charitable organization retains that initial principal deposit that was gifted to the organization.
Is the principal drawn down at all, or is it all interest?
It depends on the situation, but ideally we can set it up where the person would receive back the interest, and then that principal is there for the organization.
Sam, when would someone use a charitable gift annuity?
Yeah, so that's a lot of times, especially with, we see it a lot of times with couples where sometimes there's one spouse or there's someone in a relationship who, sometimes someone is more of the risk taker. They did all this work to build up this principal. The other says, I'm not the financial person. I'm not the numbers person. I just want to make sure that I have a set fixed amount that I can rely on. So a lot of times that's the scenario where we see that, where someone is mostly interested and I just want to make sure that I have this safe amount of money that I know is going to come to me on a fixed basis and I can live on that, I can budget for that, but I want this to also do a lot of good for someone. So it provides stability and planning purposes for the donor, with ultimately transferring a benefit to the organization.
Sam, can you talk to us about some of the qualified charitable distributions from IRAs?
Yeah, so that when it comes to IRAs, as many people are familiar with, at a certain point you have to start taking required minimum distributions from your tax-deferred retirement account. So a lot of times, maybe the person doesn't need, they're not using those minimum distributions for living expenses, they have that covered. So what are we going to do with this money we have to take out? So directing that instead to a charitable organization is often a great way to be able to accomplish charitable goals or those legacy goals from an amount of money that has to be pulled out of a retirement account regardless.
We're seeing here at our club, we have a couple that it comes out of their DAF fund that they donate and help sponsor one of our events, our auction event. So that's been going on for a few years now. But could you talk a little bit more about required minimum distributions?
Yeah, and that's as part of someone's active financial plan, looking to reduce tax exposure, things like that, using charitable gifts to receive deductions. That's a great way where we know we have this fixed amount that we're forced to remove from an account. So, when especially in a circumstance like that where the person's not relying on that as their normal income, when those funds have to come out directing those automatically to a charitable organization, it's a perfect automatic way to be able to build a legacy, to be able to receive the tax benefits of making the charitable distribution, but also satisfying the requirements of a retirement account.
Sam, can folks donate securities?
Yeah, absolutely. So that is actually a great asset to direct towards a charitable organization rather than an individual person. In that a lot of times with securities, we have these capital gains that are sort of lurking in the background and get paid if we are cashing that out. Versus a charitable organization can receive a lot more value from directly receiving those securities than an individual person may be. So the gift goes a lot farther when directed towards a charitable organization than it does towards any other person.
And could you also talk about donor advised funds?
Yeah, so donor advised funds are a great way. And we've seen this, a lot of times we see it with people who, they receive, sort of a larger sum of money in a given year than, in normal course of business. So whether that's a big business deal that closed or the sale of an asset, something like that. They say, okay, I need to do something with these funds so I'm not hit with a huge tax bill for this one weird year. But I don't necessarily want to, just pick an organization or pick a cause and just unload the money. So a donor advised fund lets you take a sum of money and direct that towards charity, but you don't have to necessarily pick who or what that is right away. It allows you to set it aside for charitable purposes, but then direct how it is distributed over a longer period of time for the organizations or the particular causes or functions of those organizations that may arise in the future, but we're receiving kind of the immediate tax benefits of that donation in one particular year.
Sam, could you also talk to us about real estate donations?
Yeah, absolutely. So that's another great asset where, a lot of times there's built-in tax liability to a real estate asset. And that's something that can instead be donated or gifted to a charitable organization that's going to receive much more favorable tax treatment. So that one is important. So it's not as simple as certain financial accounts where you can designate a beneficiary. We would absolutely recommend looking at setting up a trust or incorporating that gift within someone's trust, because we don't want to have to go through the probate process for a year and a half, 2 years just to get that asset over to someone. But definitely during life, upon someone's passing through a trust, either way, real estate can be a great gift to a charitable organization.
Well, Sam, we have a brochure here that's a personal financial affairs record, and it gets all of your information in one brochure. It's something that kind of goes hand in hand with what you're talking about, to help with a living document and to have it in one place. But for your reference and everybody else, if you'd like some more information on this, contact us at bgc.plan.gifts.
Yeah, you mentioned this personal financial affairs record. This is a great resource. So I talked about a lot of times, estate plan's not just limited to someone's will or a trust. Maybe there's beneficiary designations. So a lot of times there's things that fall outside of a trust. So this is a great option for people to keep track of everything. It's important, if you are naming a beneficiary designation, naming a charitable organization as a beneficiary, things like that, to let someone know. What we don't want is some account that you had a great plan for, but we miss a piece connecting that asset, letting someone know, hey, go look, if something happens to me, go look here, talk to this person. So a great resource. You can let someone know about your trust, let them know about any other accounts with different built-in beneficiary designations. So definitely encourage people to check this out.
And Sam, how can they contact you?
Yeah, so the best way to reach out to us is through our website, McGovernLawGroup.com. You can find our phone number, email, contact forms, whatever you need to get in touch with us in your preferred method. We've got it there on our website.
Sam, we appreciate you joining us at Sam's Corner.
Thank you.